RKB Accounting specializes in cross-border taxation. Your one-stop solution for filing taxes in the United States and Canada. RKB handles income tax, sales tax, payroll, and bookkeeping, and also helps in incorporating your business on both sides of the border. Please visit us at rkbaccounting.ca to learn more about our services.
Income. Now let's look at if he has rental income. Yes, he does have a property which he has rented out. So we are going to create a rental income. Rental income that you are going to report on T776. Create new T776. A statement of real estate rental. Name John Smith. Address of the client. The client's mailing and home address. And for the period it was rented, 2022-01-01-20. This comes automatically, so I don't need to override it. 31st December 2022. Was this final year of your rental income? That means in 2023, you are not, either you sold the house or you are occupying yourself. Then you can check the box. Yes, it was my final. Details of co-owner and partner. So if house is owned by two people, then you can specify the percentage of ownership, and all the income expenses will be prorated and you will pay only for your portion. So for example, if the house is owned by both the spouse, then 50% of the net rental income will be reported by one spouse, and assuming their ownership is 50-50, and the 50% will be reported by another spouse. So in this case, I have said John is unmarried, so 100% is John. Now here you have to give the address of the property. Waterloo Street, City, Waterloo, Province, Ontario, N4K2G1. Country Canada, we don't need to provide that. Only one property he has. Gross rental was $24,000. And then you fill out the expenses. Advertising, insurance, interest and bank charges, office expenses, professional fees, management and administration fees if you have a condominium, repairs and maintenance, salaries and wages. If there you hire a person to manage your rental properties, generally happen when you have more than 2, 3, 4, 5, 10 properties. Property tax you must be paying for your property. Any travel expenses, you went to the house for repair, so you can claim traveling expenses. You went to Home Depot, bought the equipment, then you went to your rental property, you install that. Utilities, unless it is paid by the tenant. If the tenant is paying utility, then you will not claim here. Motor vehicle expenses. If you are using your vehicle, you have a vehicle, you went to Home Depot, you loaded some lumber, and then went to your rental property, did some deck in the backyard. So you can, since you use your motor vehicle to do some work at the rental property, you can prorate your motor vehicle expenses to the extent and claim it here. If you see any other expenses which is related to your rental income, you can claim here. So in this case, suppose he has $1,212 advertising. He advertised on realtor.ca asking for tenant. Insurance, $1,715. Interest and bank charges, $43. Office expenses, $247. Professional fees, $500. Management, he doesn't have a condo, this is a house. Repairs and maintenance, 3,707. Salaries and wages, he doesn't have any employee hired. Property tax, 4,278. Travel, he went to do some repair or collecting the rent check, so $458. He uses his phone to talk to the tenant, broker. So uh, roughly around his phone bill is $100 per month, so $1,200, and you use 10% of that, so $120. So this is your net rental income. Now, on your rental property, you can claim depreciation, but I have not specified his asset details. So let's create the asset, T776 asset, or even you can do F4 and find out that. So description, building, class, always number one. Cost beginning of the year, 845,000. Should if it was purchased in the current year, then you put an addition. I'm assuming. Okay, let's put it on addition. If it was from prior year, then I would have carried forward from last year. Okay, so addition, it doesn't allow me to enter here. So there must be some, here is the addition. So when I'm entering here, it gives me override. Override means this field is automatically calculated. Now I need to find out where do I enter the information which can be picked here. So I know it is at the bottom, current year addition, building, transaction date 2022 0101, percentage 100%, cost of addition $845,000. And when you sell your house, then you can put it the amount of proceeds of disposition. The system will automatically calculate the capital gain. Accelerated depreciation, no. Oh, personal use 100%, sorry. Personal use 0. So it's asking for personal use. Was this property used for personal purposes? For example, if you're uh, if you're only renting your basement, so the same property is used for personal and for tenant. In that case, you will specify the percentage used for personal. So $845,000, half year UCC, base for CCA, and then it is automatically calculating $11,600. Let's look at 850,000, 845,000 times 0.04. So it's coming to 33,000 divided by 2. So it should be 16,000. Okay, so it is allowing me an immediate deduction of 422,000. Okay, okay, I got it. So the rule for claiming depreciation on your property when you are reporting rental income, You cannot report a rental loss by claiming depreciation on your property. So his actual, if you look at the depreciation claim, 845,000 times 4% divided by 10, 33,800. So he can claim depreciation up to 33,800. But his rental income is only left 11,679. His rental income is only left 11,679. So he can claim depreciation only up to 11,679. He cannot claim more than that. You cannot report a rental loss which includes depreciation. So for example, if he has a rental loss, so his rent is 1,000 only. He got a gross rent of 1,000 only, and he incurred expenses for $12,000. So he has a rental loss. And if you look at his depreciation on line 9947, it became 0. He cannot claim rental loss with depreciation. Yes, if he has rental loss due to other expenses, he will be able to claim a loss of 11,321, but he cannot increase this loss with any depreciation amount. Now let's make his rental income is $25,000. Now he can claim depreciation on total capital cost allowance. Line 9936, 12,679. Now let's make it 30,000. Now he can claim depreciation up to 17,679. And he is reporting 0 rental income because he has enough depreciation to set off his real estate rental income. Or suppose if he has a loss, then he is going to report 10,321 excluding depreciation. So when you come to 2-year summary, his employment income is $250,000, rental income minus $10,000, self-employment income $10,908, and total gross income is $250,000. He does not have items to deduct his except the CPP. So his taxable income is almost same, $250,000. That's it. Any question? No question. Okay.